Hey everyone, my name is Jack. Welcome back to the channel. I cover a variety of topics as they relate to real estate, investing, the financial markets, and basically everything as it relates to personal finance. So if you like that sort of content, be sure to have a look around the channel, and if you like what you see, be sure to subscribe. But in today's video, I want to talk about how Warren Buffett recently bought over $500 million in Barrick Gold, which is a gold mining stock and a stock that I own in my portfolio, and also how he sold off shares of American banks like Wells Fargo and JP Morgan Chase. This is a move that I think the financial media unjustifiably did not cover very much, since I think it has much broader implications, not only for how Warren Buffett is probably thinking and how Berkshire's thinking, but also what this probably means for the US economy. Because this is an unusual move for Warren Buffett. He has historically been very pessimistic when talking about gold, as in gold the metal. At an annual meeting in 2018, Buffett said, if you bought gold at the time of Christ and you figured the compound rate on it, it may be a couple tenths of 1%. And that's probably true, but one thing that we didn't have at the time of Christ was the Federal Reserve and the many central banks throughout the world that now have fiat currency. Because basically throughout human history, gold has been considered a store of value, and when there wasn't a lot of inflation, which was pretty much never, besides new gold being minted, which was hard to do compared to being able to print lots of money, gold's value was relatively stable, and the price of gold stayed stable as well. And this isn't even to mention the fact that governments often pegged the price of gold to their currency, so it was even more stable since there was mandated prices for gold and it couldn't necessarily be traded freely on the open market like it can today. But why would you invest in gold at all? Well, as I said, gold is a store of value, so we'd expect that all things kept equal, gold will maintain its value over time, and if there's more currency produced, then the price of gold would rise with it, and if there's less currency produced and we get some sort of deflation, then the price of gold would also lower, but it would still maintain that value relative to other currencies. One increasingly less far-fetched possibility that is making gold more attractive as we move through this pandemic and the economic changes that we're seeing from central banks specifically is that we may see countries revisiting a gold standard where they would peg their currencies back to gold and currencies would be backed by something like gold or a precious metal in actually issuing that currency. This would drastically increase the demand for gold and would also limit central banks' ability to print lots of fiat currency and debase the currency thereafter. And if you had that spike in demand, you would have a huge spike in the price of gold as well, which would allow those who invested in it early to reap very handsome profits. But generally, investing in gold is really a way to preserve your purchasing power against inflation, and that's really what I do when I invest in gold, but I also invest in gold stocks, as I'll get into. If you want to learn more about some of my gold holdings, definitely check out my M1 Finance series. I just posted a video about gold and gold stocks that I have in the portfolio, so definitely take a look at that video. I'll go ahead and link it above. Now, I have to note that some people have said that this probably wasn't Warren Buffett's personal decision, since his investments typically are humongous and they're many billions of dollars, since Berkshire Hathaway does have an ungodly amount of cash. So it's not necessarily that Warren Buffett picked Barrick Gold when he made this play. It could have been his team of analysts, but it still is a sizable $500 million play, and it is Warren Buffett's money, at least in some sense. Which brings me to companies that mine gold. We already talked about gold and why people would invest in the metal itself, but what about the mining stocks? Well, a gold mining company is just like any other company. The product just happens to be gold that it mines and then sells. So it has dividends, it has profits. So if you have a profitable company, and it's an easy to understand business like mining a rock out of the ground, then it can be worth investing in depending on how that company is capitalized and how much debt it has, just like any other stock investment. As the price of gold increases, we would expect the profit margin of those gold companies to also increase because the price of their product, the gold, is also increasing. And when you have profits increasing, you would expect more dividends or more capital growth or anything like that that you would see with any other company that sees more profit margins. And unlike just investing in the metal directly, the company can actually mine more gold and find more profits, since it's basically creating that more valuable good out of nothing. In this case, it's actually digging it out of the ground, but it wasn't on the market beforehand. So as a company takes more gold out of the ground, it would then have more products to sell and thus more profits. But in short, if gold does well, then we would expect gold mining stocks to do well, if not even better, because of their ability to get more of it and because they have more things that they can diversify their money into. It's not like when you buy gold, you have to hold that gold, and the only way to get the money out of the gold is to sell it. In the case of a gold mining stock, you can get money based on dividends and the profits that the company gets, just like a normal stock. So it has a little bit more room for true investment growth and passive income, unlike just owning the metal itself. But just like any other company, there's more risks associated with investing in the company rather than just investing in the metal. The metal's not going to do anything. The metal's not going to go bankrupt. It's just a metal. Not to say that the metal value can't go down, but if the metal value goes down, then the profit margin for the company is definitely going down and probably would free fall quicker than the metal itself, if I had to make a guess. Obviously, it depends on the company and how much money they have to pivot or diversify or whatever. Now, you can invest in gold mining stocks directly. Warren Buffett just did Barrick Gold. Now, there's a chance that he's invested in other mining stocks since that purchase he made. This was back in June. It was just reported very recently on his 13F filing. I personally hold Barrick Gold, and I also have other gold mining stocks in my portfolio that I've picked directly. But you can also invest in gold mining indexes like the GDX or the GDXJ. Now, the GDX is for larger cap mining companies generally, while the GDXJ is for the junior mining stocks, so smaller cap, technically higher risk, and hopefully higher reward as well if all goes according to plan. But these indexes track companies that have a majority of their revenue coming from mining precious metals, mainly gold, but also silver and other things, but pretty much just gold mining stocks. So if you want broad exposure to the gold mining industry, rather than trying to pick companies if you don't want to do that, or if you want to try to keep it very passive, you can actually just invest in this index if you're bullish on gold and you think that there's enough profit margin there for companies to increase, and then maybe you can get some more capital appreciation and dividends along the way, as opposed to just investing in gold if you're still bullish on the metal. So what does this play by Buffett mean? Well, some would argue that it's only $563 million. Buffett has billions and billions of dollars in his cash hoard. And yes, that's true, but I mean, $563 million is $563 million. This is a significant play no matter which way you spin it. And this is coupled with the fact that he sold off some financial stocks for US banks. That's a big move, since Buffett is typically very bullish on America. He's very outspoken about that, and he likes to believe in the American system, but this seems like he is losing faith a little bit, or at least he's trying to hedge his bets, since the only reason you would buy gold stocks is if you're bullish on gold. And typically you'd only be bullish on gold if you think that either you're going to have a collapse in currency or the currency will continue to be devalued, which would mean that we'd have a lot more Fed printing, which typically doesn't mean that things are going well for the economy. So to me, this move shows that Warren Buffett is losing confidence in American banks, since a lot of them are just relying on debt, and that is very risky. And to hedge some of that risk, he is trying to get into something that will hedge against a collapsing dollar and all the collapsing fiat currencies around the world, so that he'll at least have something to prop it up if there happens to be a collapse. And obviously he sees value in the company in that it's underpriced right now, and he sees the value of gold going up in the short, medium, and probably long term. The bottom line is Warren Buffett is bullish on gold, and you're not going to be bullish on a gold mining stock unless you are bullish on gold. So what do we do from here? Well, the first thing to do is to hope he's wrong and that we don't have a currency collapse. But realistically, it looks like the currency is going to keep going down in value because we are printing more and more of it every day. And the only way that's going to work is if we see inflation, whether that's in asset prices or in consumer prices or both. We're printing lots of currency, which has to lower the value at some point, sooner rather than later, most likely, but we'll see. But keep an eye on the price of gold in relation to the dollar. It's been surging as of late since this whole pandemic hit, and since we had this massive flood of dollars into the market. And if we have another stimulus pass, I would expect the Fed to get those printers rolling again. The money printer goes burr after all, and we'll see even more money hitting the market, which I would assume would raise the price of gold even further as this safe haven asset that holds its value consistently, since there's not a huge surge of it coming onto the market as with dollars. So should you invest in gold mining stocks? Well, that is entirely up to you. I'm no financial advisor, but you should definitely take a look at it. If you're thinking that you're bullish on gold because of all the things that Warren Buffett clearly sees, or that I've mentioned already, or that maybe you see from some other factor, definitely give them a look. The GDX, GDXJ certainly are great options for diversifying into the gold mining sector. But if you want to pick companies like Warren Buffett just did, you can do that as well. Gold stocks would probably carry more risk, but potentially more reward compared to the metal itself. But it's totally up to you as to how you want to diversify your portfolio, since that's really what gold is. It's a way to diversify your portfolio against kind of the system that we currently have now. Buffett clearly thinks it's a good idea since he threw $500 million at it. You don't have to throw that kind of money if you had it laying around, but he clearly sees it worth allocating some of his portfolio towards gold and gold mining stocks. But anyways, that's all I've got for today. If you like this video, please like it since it helps the channel out a lot, and be sure to subscribe so you don't miss any updates. I post new videos every single week about financial markets, real estate investing, and everything as it relates to personal finance. So if you like that sort of stuff, definitely subscribe. And also check out my new book, The One Property Retirement. It's going to be releasing on August 28th, but I'll definitely include a link in the description below that talks about what the book's about, and I'll include the Amazon link as well to pre-order the digital version of the book. There will be a print version as well. It's just not quite ready to go. It's got to be formatted and everything. But the digital version is ready for pre-order. Again, that's releasing on August 28th of this month. So very excited to finally be published. It's going to be very cool, and I really hope that you guys support the book. If you buy it, definitely leave an Amazon review. The more reviews I can get, the more it can be spread to other people, and that would be a great thing. But until next time, take care.